Hello everybody and welcome to this week's Markets to Watch from Smack the Markets for week commencing the 15th of March. So over the weekend we've had the US stimulus checks starting to hit the doormats now. At the same time we've got increasing concerns over the position of rising inflation starting to creep into the markets. There's going to be quite a bit of focus now going forward on those US bond yields, which are steadily creeping up. Later this week we've got a number of key central bank statements, and I think there's going to be a lot of focus on the outcome of those and what's said about, particularly around the state of inflation and about what controls they're likely to put in. So before we take a look at the markets, which could be quite an interesting week this week, let's just give you a quick reminder of the change of schedule for our Wednesday sessions. So rather than running this as a live stream, we're going to be running a special new live webinar called Charting the Markets. In this session we're going to be covering our 4 trading strategies that we use, and also taking a look at the live markets, the forex markets, the metals, those commodity markets, and also the index markets, and picking out some of the best markets and structures that we'll be focusing on going into the second half of the trading week. There's only 100 seats available, so if you're interested in joining and learning about these sessions, then come along and register. 2 ways you can register. You can come along to Smack the Markets and join our newsletter, and you'll be sent an invitation to register for the session, or if you check the detail below the video, you'll find the link there to be able to register for it as well. As I say, there's only 100 seats available, so make sure you reserve yours if you're interested in coming. Let's take a look at the live markets now, and if we come over to the US index markets first of all, these are some of these are on steroids. If we have a look at the Dow, for example, we can see the massive crash here from coronavirus. This was about a year ago now, and the huge rally that has followed afterwards. And we can see almost recently, over the past couple of weeks, the markets have been pushing to again all-time highs, and whichever angle we look at this is looking extremely overextended. Having said that, these markets have just been given another shot in the arm, and a vaccine shot in the arm, I should say, and this is helping to push these to the long side, and this of course in the form of stimulus checks. So our position really on these index markets, particularly the Dow and the S&Ps, is that we're sort of biased towards the long side, but we're only looking at intraday opportunities. We don't want to get positioned in any of these where we're likely to be held into them for a long time before we can cover risk on positions. Now when we come and have a look at the Nasdaq, this is looking a little bit different compared to the others. There's been a massive amount of stock rotations taking place over the past few weeks. This has resulted in money pouring out of those tech sectors and pushing into some of the more conventional industries that are likely to benefit greatly as the normal economy starts to open up as these lockdown eases. But having said that, if we have a look at the Nasdaq here on the weekly chart, we can see that this is back into that fair value zone on the weekly, and we've just had those stimulus checks starting to be released in the US, so just sort of bear this in mind. We may well yet have a bit more of a pop in the tech sector and in that sort of Nasdaq markets, so just sort of be aware of that. If we come over to the commodity markets, again a little bit of story on a couple of sides here. If we have a look at gold, these markets have been sort of fairly sort of soft over the sort of past few weeks, and you can see at the moment that the sort of gold is sort of pulled back recently. It's sort of sitting within the sort of fair value zone at the moment, but we have got this level up here around 1750, which is quite a strong technical level, so I wouldn't be at all surprised if we see a bit of a retracement further, possibly testing that 1750. Certainly if we get up there, I think that could be a good key decision point as to whether the market's going to strengthen significantly, and if it does, then we're looking at 50 points higher to 1.8. Alternative, which may well be what happens, is a continuation of the trend, and again that gives us a move back down towards these lows around that sort of 1.660 area. If we take a look at the oil, which is another sort of fairly interesting market that's been doing sort of fairly well lately, Let's come up to the weekly chart. Again, you can see that the market is within this trading window from the $60 to the $70 price point. There's a lot of support here to push oil prices higher, but again, whichever angle we look at this, this is again very extended. So it would certainly be nice for the market to pull back into areas of value, which I think is sitting around that sort of $60 level at the moment. So we get retracements back into that $60 level, we'll be looking for support, and if we do find support, then we'll be looking for positioning towards that $70 price point. You can see at the moment here on these sort of mid time frames that the market's just again continuing to sort of grind sideways. So from an intraday perspective, we wouldn't be looking at anything unless we started to get a break above these highs. So from a bigger perspective, we'd be looking for a bit of a retracement, a bit of a deeper retracement on these markets. So coming over to the currency markets, again, that could be quite an interesting time for these markets, because with the sort of position on inflation and the sort of central bank sort of positions as well, a lot of this is now coming around to the strength of the dollar. If we have a look at some of those dollar markets, they are looking rather sort of battle bruised at the moment. So for example, sort of euro dollar looking more on the weak side, but we've got that sort of key 119 level to get through before we can start to get any clear space to the short side. Again, if you have a look at this from the higher time frames, 119 looks to be the support level. We've had key support, we've had trades around 119 last week, so we certainly want to be underneath this for any new shorts to the short side, and then we're looking for 118 to be tested. Another market that could start to look quite interesting is the euro against the Kiwi. Again, if we have a look at this from the higher time frames, we've had weak euro against the Kiwi for quite some time now, and the market's pushing up against a significant structure point here. You can see this on the weekly chart. So breaks underneath this level could actually open this market up for a reasonable move to the short side. Again, the level actually and the structure makes sense when we start to come down to the daily time frame. You can see this sort of market here just sort of sitting on top of this sort of level of lows at the bottom here. We'd want to see the market underneath that level, because even here on the daily time frame you can see how many days the market has just sort of been grinding sideways, so we don't really want to be stuck inside that. Come down to the 4-hour chart, again we can start to see the market sort of testing these lows here. So again, let's wait for the market to get through these lows, maybe possibly a break and a pullback and rejection again, and that will be interesting sort of positioning for a continuation short. At the moment here we have going into the beginning of this week, we've got euro weakness and we've got Kiwi strength. So strengths and weaknesses are supporting this trend to the short side at the moment, so we'll be keeping a close eye on how that develops. So there's a few markets there that we're keeping a close eye on at the beginning of the week. Again, just to remind you, join us on Wednesday for quite an interesting sort of live session and live webinar, and we'll certainly look forward to speaking to you then. Hope it helps. I'll speak to you then. Bye for now.